Today is a quite mixed day. Some things are up, some things are down, but one token is standing out, and that is CRV, Curve Finance, which is one of the OG protocols, one of the very first decentralized finance protocols. The question is, does it make sense to buy CRV now? Let's have a look at the data most people are not considering. Now here are the top 100 cryptocurrencies. The best performer today is CRV, and even this week it's among the top 5 performers. Historically we had been at $1.20, now we are just halfway there. Does it make sense to potentially buy for another 2x? Now in the very early days there were only 2 decentralized finance protocols that got major adoption, and that was Uniswap and that was Curve Finance. Uniswap focused on trading or on swaps between volatile assets, right? So let's say Bitcoin versus Ethereum or Ethereum versus another altcoin. That's still what Uniswap is mainly used for, right? It's trading volatile altcoins against one another. Curve Finance, on the other hand, had lower trading fees compared to Uniswap, but it specialized on stable coins. So it was for trading for Tether versus USDC versus DAI, and that's what Curve Finance dominated in the early days. But times have very much changed. Curve Finance now also allows for trading among some volatile assets, but the usage of the protocol went down massively. The total value locked on Curve Finance knew only one direction. It was growing and growing up until the beginning of 2022, when we reached a peak of 24 billion. Now we are down to only 2 billion, so a drop of more than 90%. And it was especially the depegging events of some of those stable coins that led many people to abandon the protocol. So over here we've got Magic Internet Money that depegged. Then over here we've got Terra Luna UST. That was a major depeg that also started the whole crypto winter. Then we had the FTX collapse. So it seems like with every negative event, the returns that were offered by Curve Finance weren't that attractive anymore, because now people had to risk adjust. And so despite the massive growth of Curve Finance, we actually did not see CRV outperform Bitcoin. And that's because of tokenomics. So over time, the supply of CRV increased. And because of that increasing supply that didn't match the demand, we didn't see CRV outperform Bitcoin. And then when afterwards the total value locked went down, when less and less capital was locked in the protocol, CRV started to just go down versus Bitcoin. So this is the relative valuation chart of Curve Finance to Bitcoin. Initially, things still looked okay. Initially, CRV could keep pace with Bitcoin, but then came all those depegging events and less usage of the platform. And things are simply not that pretty anymore. From the top here in January of 2022 to the bottom in November of 2024, we have seen CRV underperform Bitcoin by almost 98%. So had you not bought CRV but Bitcoin in January of 2022, you'd have 50 times more money. But then we saw an interesting rally, right? A 300% gain versus Bitcoin with a subsequent deflation. And this is now our recent rally. This is why CRV is outperforming the rest of crypto in the last few days. But again, the main reason why this is going down is tokenomics, and that's explained over here. So this is the circulating number of CRV over time. It started at 200 million. It's now at above 2 billion. So more than a 10x in expanding supply. And a lot of this is allocation to the core team and emissions to the stakers. Now there was some drama around Curve Finance and CRV in the last months. One of the founders wanted to exit their CRV, but unfortunately there isn't enough liquid CRV because a lot of this is simply staked or is with the centralized exchanges. So what that founder did is he simply just put the CRV as collateral on other decentralized finance protocols like Aave, and then he borrowed against this. So there was no real selling pressure of CRV at the time, and still the liquidity was available to the founder. And even if the liquidation happens, that's no real problem for that founder. I'm of course talking about Michael Egorov, and he bought this mansion over here with his cash out. People learned about this and then sold their CRV as a reaction to this, and then Michael Egorov made some deals over the counter with some crypto venture capitalists to then avoid the liquidation. But yeah, that's all old news. The question is, what's going to happen from here? We don't see any increased adoption of the Curve Finance protocol, and we still see some emissions. But the main driver probably of the future price will be the staking. Will CRV tokens get unstaked? Because once they do, we've got a lot of new circulating supply. A lot of the supply will likely get sold off because CRV is simply underperforming Bitcoin long term, and that then is probably pretty bad for the price. So have a look at this. This is the Curve Finance 3 pool. It's a very popular pool on the protocol. It peaked at 6 billion, is now just a former shell of itself. Here's the composition of that 3 pool. It's relatively balanced between Tether, USDC and DAI. And then what we've got over here, and this is the actually important chart, this is the locked CRV. So there are now 900 million CRV tokens locked in order to then get more tokens out in the future. The total supply of CRV is 2.2 billion. So it's roughly 40% of the entire supply that's currently locked. When this chart here goes down, and it seems to be trending down in the last few days, if this continues to go down and accelerates potentially, that is extremely bad for the price. Because this is how staking fundamentally works. Staking is doing nothing else but contracting the current circulating supply at the expense of expanding future circulating supply. Right? So we artificially increase the price today in order to then artificially lower it in the future. The reason why people stake tokens is in order to get more tokens in the future. So the more tokens are staked, the more of a ticking time bomb do we have, the more potential for unstaking do we have, and unstaking means more liquid supply, means more selling pressure, means a lowering price. I'm skeptical of the current rally in CRV, but it's probably still too early to bet on falling prices because we have seen rallies that were way larger in the past. So in case CRV outperforms Bitcoin by another 50%, maybe even 70%, then I think it's a very nice opportunity to bet on falling prices. I'm not saying the price will rise further. I'm simply saying that now betting on either direction is risky business. I tend to be rather bearish on the market as a whole. I don't see a lot of new investors entering. I see more and more player versus player games. That's why I tend to bet on falling prices, and I'm simply just looking for entry opportunities. For CRV, it's probably still too early, but in case it does flip, in case CRV goes up further and there is a potential short opportunity, I will take advantage of that opportunity. Now, when things don't look that great, when most altcoins are going down and when they especially underperform versus Bitcoin, I think actually it's time to make money. It's not time to exit the market. This is what most people do. I think that bear markets are actually the easier markets to make profit. Because have a look at this screenshot here. This is a premium member that shorted a token with a modest leverage of 3x, and that made 25%. This is his message, tagging me, I made my first profit, thanks. I'm not sharing the exact asset because we are still betting on falling prices of that asset. Again, there are some very weak altcoins that sometimes pump that we can then short, where we can make very easy profit during times like this. Most altcoins are now deflating. It's an always repeating story. What we've got over here is XRP relative to Bitcoin. So this is a relatively long-term chart starting in March of 2021. And whenever we see positive news, when all of attention goes to XRP, the price is rallying, but then sooner or later we do get our crashes. And it's relatively straightforward to make money with those crashes. We're simply looking at what currently pumped a lot, where didn't we see any new all-time highs, but where are we likely going to stay in the trading range, and then we just bet on falling prices. And especially when there's currently a bear market, when a price relative to Bitcoin goes down by 74%, we can make more than even just 74%, right? We can lever this up slightly as well. Or have a look at Dogecoin, right? The same story. Elon Musk tweets about Dogecoin, it goes up, and then afterwards the attention moves to the next token, and we just see a continued price decline. This is again 74%. We made money shorting Dogecoin, by the way. So I'm sharing all the trades that I do betting on falling prices with all the premium members. There are also alternative ways where we don't have to be that active, right? There are some altcoins that are that bad in tokenomics, where the supply is increasing that quickly relative to the demand, that the underperformance relative to Bitcoin is pretty much just a straight line. So what we've got over here is Balancer relative to Bitcoin, and it simply just continues to go down. Now the reason why I'm sharing this position here is because the tokenomics aren't as bad anymore compared to a few years ago, right? I was shorting this throughout the whole of 2024, and I've closed that short now. But the reason why charts like this exist, the reason why we can make money with this, is because the supply increases over time. But this is now Balancer, and a year ago we saw how the circulating supply would still go up by like 30-40% within a year. This is not anymore the case. So relatively speaking, Balancer doesn't expand that quickly anymore. That's why the underperformance is slowing down. That's why I'm now sharing this publicly on YouTube, right? I didn't share this on YouTube in 2023 and 2024. This is where I only shared this in premium. We really have to be realistic about the market. I believe strongly that the long term wins the game. It's always about being consistent. It's always about beating the market over the long term and have proper risk management. Making money in crypto is not just about finding the next 100x meme coin. That can work with a lot of research during a bull run, and when we've got a lot of influencers that all coordinate each other that then push up the price. But in a bear market, that doesn't work. When there's no new investors joining, that's not the way to make money. I mean, just have a look at this. This is the top 100 tokens. And what we've got over here is Bitcoin, and this is ordered by the performance in the last year. We've got 16 altcoins that outperformed Bitcoin in the last year. 2 of those altcoins, by the way, are gold derivatives. So this is just the gold price going up. So in the end, we've only got 14 out of the top 100 cryptocurrencies that did better than Bitcoin. The vast majority of altcoins did much worse than Bitcoin. And that happened during a period where Bitcoin actually went up. Bitcoin during the time period went up by 25% almost. This is something most people don't understand. Most people think that when Bitcoin is going up by 25%, that the altcoins in theory should go up even more because they're smaller in market cap, they're more volatile, they're somewhat of a levered Bitcoin, but that's only true to a degree. Bitcoin can go up by 25% in a year, and still the vast majority of altcoins does worse than BTC. So instead of trying to find the next 10x meme coin, when it's all just player versus player and when no new people enter the space, instead of trying to beat the impossible game, why not get the odds in our favor, right? When more than 80% of altcoins in the top 100 do worse than Bitcoin, why not bet on that? Why not bet on the 80% doing worse than BTC and make money with that? That's personally what I currently do, and that's also what the premium members are doing. That's how short-term gains like this happen, while the vast majority of people are just losing. Now, I have not seen any other influencer being that transparent about their own performance, but I want to share what kind of performance I make, and I also want to share this over time, as in not just I have made X%, but I want to share how volatile the game actually is. Crypto trading is a game of both luck and skill. And the longer we are engaged, the more trades we do, the more the skill component will be stronger compared to the luck component, right? It's pretty much like in a casino. If you play versus a casino over the long term, you will lose money. You might win money short term, right? Because the luck is on your side, but over the long term, the odds, the expected value is what plays out. And so what we see over here is a scatter plot. How much did I outperform buying and holding Bitcoin every single month in the last 3.5 years? Some months have been incredible outperformances over buying and holding Bitcoin, right? The very best month was over here with 25% outperformance, but we also had pretty poor months, like over here, an underperformance of 18%. So the thing is fluctuating. What we've got as a dotted line here is a 12-month moving average. Most 12-month averages have been positive. When we average out all of those data points, we come to 2.1% per month. So in other words, on average, I make alpha over buying and holding of 2.1% per month. So when we compound this, it's a bit over 25% per year. Now, is this enough? Depends on how much you're betting, right? If you only have $100 to invest, it doesn't matter. But if you've got $10,000, maybe even more than that, it does matter, because again, this comes on top of Bitcoin's performance. And so here's what I believe Bitcoin will do over the long term. Instead of just looking at the direct prices, I prefer to look at the realized price, so the average cost basis. Over time, the current price is hovering around that realized price, right, the average cost basis, but the cost basis itself tends to increase quite steadily. And this increase over the last few years was roughly 25% per annum, 30 to 25%. I'm rather conservative, I say 25%. So we've got a bit over 25% per annum from trading. We've got a bit over 25% per annum from just buying and holding Bitcoin. So compounding this again is more than 50% per annum. If you've got more than $10,000 and you put this into 50% per annum long term over the next 3-4 years, that kind of money does matter, right? Isn't that better than trying to gamble it all away with meme coins? Meme coins are ultra risky, and that's why most people just put a few $100 in them, maybe $1,000 here and there. But if you've got a strategy that's somewhat limited in risk and where you have a long-term track record, then putting in more money, allocating more of the overall wealth towards such a portfolio does make sense, right? Then we can play in the tens of thousands, maybe even hundreds of thousands. We don't have to just bet $100. Now, everything I've just explained is in more detail in the premium membership in the tutorial section. There's more than 100 premium tutorials in the membership, and it's not just about shorting, it's not just about betting on falling prices, it's also about risk management, about asset allocation, about on-chain analytics, etc. Besides the tutorials, I also share, of course, what kind of trades I do, so that you can simply just copy trade me, right? You don't have to go into every single altcoin in detail all the time. I dare to say that most crypto communities probably lost money in the last few weeks, and I don't think that's true for the premium membership here. I do believe that the vast majority of our members made money because we were prepared. So feel free to check it out. It's currently $125 per month. There's also a 1-week money back guarantee, so in case you don't like premium, just message me within the first week and I'll refund you 100%. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well, helps the channel grow. See you again on YouTube, or see you in premium. Cheers!